Alrighty, so welcome everyone. My name is Mark Caesar, and welcome to the Financial Freedom Through Apartment Investing, an affiliate of the GOB Network. And we are also live on the good old Facebook. So, welcome, social media world, if you are watching. And our amazing guest speaker for tonight, I call her the networking queen because we're always bumping into each other at some different event. It is Melanie McDaniel of Freestyle Capital Group. Welcome, Melanie. Thank you for sharing your time with us.
Thank you. Happy to.
So I will let you tell us about yourself. I think you'll do your bio more justice than I can.
Sure. Okay, so from what I understand, you want me to talk about why the heck I am in Mexico and I was in Belize last month and why I am moving all over the place. And now it's like, where's Waldo? People ask, where's Melanie now? So I identify. I'll go with Carmen Sandiego. Where in the world is Carmen Sandiego? Instead of Waldo, I identify more with Carmen Sandiego because she was a badass. Can I say ass? Sorry. Anyway, so I haven't always been this. I just a quick story about where I came from. I grew up in Utah. I joined the military, one because I wanted something to pay for my school. I wanted to be out from under my parents' wings, and I had this itch to travel ever since my youth. Travel has been in me. I just, how I was raised. You don't travel the world. I mean, maybe if I was a photographer or something, I didn't really know what that would look like. So I joined the military. And I chose the Navy simply because I knew if I were in the Navy, I would probably travel. So I got lucky, and my first duty station was in Italy. So when I was 18, I spent my first 2 years in Italy. So that did not satiate any sort of travel bug I had, it only fueled it. When I was getting out of the Navy, I knew I needed to go to school because that's what I was taught, right? Go to school, get good grades, go to college, get a job, that sort of thing. So, okay, now I'm on college steps. So go to college. I'm thinking, what do I want to do with my life? I had zero idea, zero. So I started making a list of things that I liked because I wanted to work in my passion. I knew enough at that young age to know that if you're going to have a job, it's a big piece of your life, a lot of hours of your life. You should enjoy it. So I started making a list. The first thing I wrote on my list was travel. And I just kind of stopped there. So it was on a piece of paper, travel. And that's where I stopped. So I studied travel administration. I have a bachelor's of arts in travel administration from a school in Denver, Colorado. So when I graduated from college, I was working in the hotel industry, and then I moved to Waikiki, and I was working on Atlantis submarines as like a co-pilot deckhand thing. And that I knew was kind of like a dead end sort of thing. I went back to my roots. I saw my stepmom. She was a park ranger at the time. She worked for the federal government. So I'm like, well, I can do that while I figure it out. At least I'll be moving forward in life. So I ended up doing that. I became a park ranger for the National Park Service. So that, it was kind of nice, but it was what it was. I was a law enforcement officer. I had to mind people's business. I don't want to mind people's business. I want to mind my own business. But I did that for 9 years until in 2015, I read Rich Dad, Poor Dad, which, like a lot of people, is probably where things change in life. It was a mentality shift, a paradigm shift. And once I read that book, I could not unlearn what I learned in there. And I had this unfulfillment in my job. Being a park ranger is a great job. And some people, there's their dream job. I was miserable, but not miserable enough to know it until I started really thinking about it. I read the book and realized trading your time for money just for your living expenses, putting some retirement away, was only going to lead to a mediocre retirement. So that was very unexciting to me. And I knew I was meant for, I don't want to say more, because again, some people, being a park ranger is that thing they want to do. So I don't want to demean that at all. But I knew me, Melanie, I was meant for something different, something more for my fulfillment. So real estate made a ton of sense to me. It was interesting. And I planned from 2015, by 2017, I was ready to make the leap. And I became a real estate agent as a stepping stone to the full-time investor. So lots of learning between 2015 and 2017, became the real estate agent, never did the investing so much as an agent. I did a few things, like I bought I used my retirement account and bought a house in St. Louis. So it was a turnkey rental. Never saw the house from the whole time I bought it and sold it. Never even saw the place. But that was the only thing I did. So I wasn't competing with my clients in the market I was in, except when I got a 24 unit from a quad campaign. I sent a campaign letter saying, hey, I've got buyers who want to buy quads. I sent it to every quad owner in Ocean View, Norfolk, Virginia. And off of that, I got a 24 unit apartment complex. So when the guy said, I have a quad, but I also have a 24 unit, I said, I'll take the 24 unit and I'll sell your quad. So that's what I did. So that was my first multifamily property. That one we closed last year, January 2020, right before COVID. So 2020 was an interesting year, but we are in the black. And thank goodness the bank told us not to pay our mortgage payment, I think for 4 months. It wasn't, what is it called when you tack it on at the end? Well, I mean, it's tacked on at the end, obviously, but it doesn't count against our use of whatever that's called. What is that thing called?
Debt to income ratio?
No. Where forbearance.
Yeah.
Typically, when you get a loan, forbearance is kind of built in the fine print, and hopefully you never have to use it. But we didn't have to use it. They didn't even count it against our forbearance. So if we ever need it, it's still available. But anyway, we're good. We're in the black. So that was a fun ride. It was a Class C apartment. We hadn't stabilized yet. We literally closed in January. And as you know, we shut down and people lost jobs and things by February, March. So at the same time, I also invested as an LP in a deal, a large 276 unit apartment in Huntsville, Alabama. And about the same time, I had decided I wanted to go into full-time multifamily. So I did Michael Blanc's coaching program, and that was probably 2018, 2019 is when I finished, and got the 24 unit right in 2020. So that was kind of on par for that coaching program. But during my journey with Michael Blanc's group, I realized a couple of things. First of all, being a real estate agent is not... It just gives you no time freedom. In fact, working for yourself, owning your own business, especially being a real estate agent or something in sales or where you have clients, they call you at 11 o'clock at night. They text you all hours of the day. And when you're in Spain, it doesn't matter. They want you to write a contract. So I, being the traveler that I am, I still was traveling, but it was awful. I would work for 6 or 7 hours a day while I'm trying to be a tourist. So I knew being an agent was not going to happen for too long. I did it for 2.5 years. When I finally jumped from being an agent to what I call now a full-time, apartment investor, I had a runway from my real estate agents because I had a team, and I told them, or I asked them, if they'll give me the 6-month runway where I'm still the team lead, so I'm still getting a portion of their sales, then I would give them the team, give them my database, give them the business I built, the logo, the branding, the meetup, everything. So they agreed to that. So 2020, I had passive income coming in from that while I built Freestyle Capital Group. So January 2020, I moved to Thailand, because if you're going to build a business online, you could do that from anywhere in the world. So why do I have to sit in wherever? I wasn't even living anywhere at the time. But when I left Virginia is when I became location independent. I sold everything. I have pretty much nothing. I have a car and I have a couple of tubs of stuff, camping gear, and then a small safe, and then some memorabilia stuff, and that's at my mom's house. But I was going to move to Phoenix because my sister lived there. Got my car registered there, I got my driver's license there, and I got my real estate license there, thinking I was going to move there and build a business and then wait for a year to do the lifestyle nomadic thing. But by the time I was moving to Phoenix, I'd already decided, why can't I just go now? So that's how I ended up in Thailand. I decided I'm not going to sit in Phoenix and build that business. I'm going to just do what my soul is calling me to do. The thing that I lose sleep over is to live and be abroad. So that is kind of what I've been doing. I am not financially free. I'm still an active investor, but active on the GP side. And what I didn't finish talking about before was what I realized, the clarity piece. As you know, on a GP team, there are a lot of jobs. There's an acquisitions person who is running numbers, talking to brokers, schmoozing brokers, going to markets and meeting people and talking, whatever. Then you have like your KP type people, and they're helping with mentoring and looking at numbers, potentially walking properties as well. You have your capital raisers, who that's what the route I decided to go, because I knew I could be a capital raiser from anywhere in the world. I just need Wi-Fi and Zoom, and I can talk to my investors. My website, my YouTube channel, and whatever my platform is what I work on. That's what my daily job is for my business, is to create content and talk to investors. So I can do that pretty much anywhere in the world. I do go back to the States frequently to spend a few weeks here and there, to attend conferences, to meet people in person, meet partners, walk properties, do things like that. So that's kind of what I've been doing. I don't really have a method to my madness. A month in a place is kind of what I like to spend. So in Mexico, I'm here for a month. The place I'm at right now is just a one-night deal. I was getting tired of Selena. I'm at like this hostel hotel, and it's spring break, and it's loud, and it's crazy, and I needed peace, and the Wi-Fi there was kind of iffy at night for some reason, and I didn't want this call to drop. So I got a night here at this all-inclusive resort, have other meetings, and I'm using the place to do some YouTube video filming, so it's a nicer background and it's quiet. And all for free because of my beautiful and lovely Chase Sapphire credit card. That is another hack in life. If you can find a really good travel credit card that every time you buy something online, you're racking up points. It helps travel. Like my flight here was free. This hotel is free. I still have tons of points, so I use those sparingly in my travels in life. So that is kind of my background. I have not arrived at financial freedom. I'm still working, but I decided, because lifestyle and traveling was so important to me, the job on the GP is, for me, is capital raising. I think if you're an underwriter or a KP, I'm sure you could probably do this as well. But if you care about lifestyle design, you want freedom of time, you want freedom of location, then start thinking about what in your job, if you have a W-2 or if you're a full-time investor, what will give you that freedom. There's no, when people say I can't, it's like, oh, can't you? You can't? Someone's tying you down. Someone handcuffed you to the railing. You can't? Like, it's a mindset thing. And I started there too, because I was an agent, and I had the same conversation with someone, and, well, I can't right now. It's like, you can't. So it's intentionality. It's intentional. You have to design it that way. You have to build it, and then you have to put it together. So as far as the presentation side goes, that's just my background. For you, not sure if any of you are interested in maybe it's just more time freedom, time with your family, time to do things you want, or if you want to be like me and be nomadic and location independent. I have no kids, plants, pets, partners, or problems for that matter.
That's amazing.
So my story is a little different. I can go and do this much easier probably than someone who has kids or cats or plants or whatever, or a home or all that stuff. So just realize that my journey started in 2015, and all the stuff that I had, I purged when I moved to Virginia, then I purged when I moved to Phoenix, and then I had a storage unit there, purged again, and I could even throw away more stuff. It's a decision and a lifestyle that you have to make, but you don't have to go to the extreme that I did, the minimalist movement and everything. I find peace in it. Like, I found more stress in owning things and being responsible to things than I do not having things. So it's an individual journey. So I'm just going to talk about that journey. I'm creating kind of a guide right now to help people kind of set themselves up for financial freedom and whatever that means for you. So there's kind of 3 overarching steps. The first step is the dream. I call it dream it, design it, do it. So dreaming it is the awareness one, that you don't have to do what society has taught us to do, that you don't have to have the house, the white picket fence, the dog, you don't have to have the job. There is a way out of what we've all kind of been taught, and there's nothing wrong with that way. Please understand, I'm not trying to sell anybody on something that they don't want, if what I'm saying resonates with you, if what I'm saying gets you excited, if this lifestyle, there's something inside of you that's talking to you, those are the people I'm talking to. The rest of you, if you're happy with your stuff and your job and your whatever, that's beautiful. Honestly, I almost envy people who have a job that they love, because it's okay to have a job that you love as long as what you're doing with the income is to buy investments that pay you cash flow. You don't want to trade your time for money and live off your income. You want to use your income. I mean, you have to live off it a little, but you want to buy the assets that will start paying you passive income, whether it's real estate or stocks or crypto or investing in a business, or man, I've got notes, I've got investments in REITs, I've got real estate, I dabble in all sorts of goodies, of crypto too. It's a beautiful thing right now. So whatever it is, you just have to be intentional about buying assets that appreciate, throw off cash flow, and the goal is to get to enough assets that you own that all of the passive income covers your expenses. So the first thing is the dreaming it, and I would encourage you to just sit down, no music, well, maybe some Baroque style music, no words, just piano or some sort of music or whatever, and just sit with yourself and think about, if you could have any lifestyle you want, what does it look like? And don't hold back, because you're only limited to what you can dream up. So that's your first limitation. I mean, obviously, if you're sitting there thinking about private jets and flying around the world in a spaceship or whatever, I may or may not be able to help you get there, but I don't want to put that limitation on you. If that is truly your heart's desire, you better get started because you got a long way to go. But if you're just looking for maybe a little bit more freedom, more time with your family, freedom of movement, then that's very reasonable. So just sitting and doing the dreaming part, that whatever you've been told, whatever limitations have been put on you, whatever you're telling yourself, I can't, open your mind to that you can. Anything is possible. And if anything's possible, then what does that look like for you? So that's what I call the dream it. So the awareness that anything is possible, and then the self-discovery. So that's step one. And then the whole rich dad, poor dad mindset shift, the money mindset is super important to shift from being the employee or the making the money so you can live, save a little bit for retirement, and hopefully retire one day when you're in your 60s. You are your youngest you'll ever be right now. You are probably your healthiest, maybe not. I mean, there's always hope for us later, right? Losing the COVID-19, that's why I call it COVID-19. Not the COVID-19, but like the freshman 15, but I got the COVID-19. Anyway, so, maybe I'll be a little bit fitter, but you're the youngest, the healthiest, and the most energetic now. Life is now, and every day's a gift, and tomorrow is not promised. So we want to make our money that we're making now not just be to cover our living expenses. We want it to be that we can buy assets that will pay us for the rest of our lives. And the goal is to build up our asset base. So that is the other thing, besides the awareness and the self-discovery. You've got to learn this money paradigm shift. And if you haven't read Rich Dad, Poor Dad, that is kind of the best book to wrap your mind around that concept. But since you're all here in this room, I kind of assume maybe you all kind of know that already. All right, so the next step is the design it. And this is kind of putting numbers out there, because you need to figure out first of all, what does financial freedom mean to you? It could just mean that you have enough passive income to cover your expenses. It could mean that you have enough passive income to cover your expenses, plus you have a runway for overages or a little bit of lavish something here and there. Maybe financial freedom to you is abundance. Whatever it is, you got to figure it out. And you have to do that by figuring out what your monthly and annual expenses are, so you know what you need in passive income to live that dream lifestyle. And then you can back into it. When do you want to retire, quote unquote, or be financially free? Back into it so it shows you how much you need to save per year in order to hit that goal. So figuring out what your financial freedom number is for me, and it's super kind of out there. I want $10,000 of passive income coming in every month. That's $120,000 a year. That is way more than I need. But for me, because I'm like a safety security type person, I like cushion. I figured I could probably live off 3,000 or 4,000 a year, just my normal life, but I want to splurge once in a while. I want to go on a safari when I turn 40. And by the way, that's this year. I want to go on a cruise to Antarctica, and those are very expensive. There's so many things I want to do. I do an Amazon River cruise. And anyway, so there are big chunks of expenses that it's hard to calculate in kind of your monthly flow. So I want that bump, not only so I can have the luxuries that I want, but also so I can continue to invest the money that I'm not spending. So if I'm getting 10,000 a month, I'm living off 3, there's 8,000 a month there that can either be reinvested or spent on the things in life that, you know, are luxury, we'll say. So figure out what your financial freedom number is. And then if you, an average number that the stock market makes, a safe number, you could probably with real estate get a better return. But if we go with 7%, it's very reasonable, even in a bad year. Assuming you draw only 4%, never touch the principal, that other 3% from the 7%, you're drawing 4, you have 3%, we're calling that inflation. So corrected for inflation, if you draw 4%, then simple math would be if your financial freedom number is $50,000 a year, then you multiply that by 0.04, which is 4%, and that will give you how much you need to have invested to get that $50,000 a year. And I'll just tell you right now, it's $1,250,000. So for me, with the 120,000, I think it's $1 million. Well, I think I can get a better return than 7%. So my number that I need to have invested is about $1,100,000, getting like a 12% return. And that is pretty reasonable if you think about how many years when you're buying real estate. As an LP, if you're just putting money in, then you need that $1,100,000 or whatever, or the 1.2 million. You need that just in pure cash working for you, making passive income. But if you are a GP, you're an active investor, you have to figure out when you do a deal on the GP, how much of the equity you're getting, how much of the cash flow you're getting, and kind of back into that number, because you might not need, because you're not an LP, you're a GP, you don't need, your money's not invested in there. So you kind of need to figure out per deal, how much are you getting in passive income and equity shares, and what does that look like when you exit the deal in 5 to 7 or whatever years. So all these numbers you've got to sit down and figure out so you can get on the path, because planning or failing to plan is planning to fail, right? So if you don't know what the plan is and you don't have a destination with precision, you are going to hit that unknowing location, because if you don't know where you're going, then you won't hit it. Net worth, figuring out and calculating your net worth and knowing what that is, I would say at least on a monthly basis. Some people do it much more frequently, but knowing your net worth helps you with that number of whatever it is you need to have invested to hit your financial freedom monthly income. So it's like all of your retirement accounts, if you have brokerage accounts, if you have like an HSA or whatever insurances you have, other assets that aren't cash flowing, like your home you live in might have some equity in it. Your car does have a certain amount of value, although depreciating. Other assets that aren't actually paying you dividends or paying you passive income, keep track of those. And then, of course, add all those together and subtract your liabilities. Liabilities are your mortgage, any debt you have, student loans, credit card loans, all those things. And then when you take your assets and your liabilities, easy math, that's your net worth, right? And of course, with your net worth, if you're in debt, especially if it's credit card debt or high interest debt, that's the first thing that you need to take care of before moving forward. For some of your debts with the smaller interest rates, like student loans, and right now some vehicles, I think I had a loan on my car when I bought it for a few months. It was like 0.9%. Well, I can make a lot better than 0.9%, or if your student loan is at 3% or something. If you can make 15% investment and you're only paying 3% on your student loan, then you as an individual have to decide if you're going to go invest that money and make the arbitrage, or if you're going to pay off that student loan just for peace of mind. So that's kind of an advanced strategy, but something you definitely should consider for yourself. It's kind of like a game, this whole money, debt, creating passive income. It's a game, and it's kind of fun. If you understand how it works and can get into it, you should get excited about it. Wrap your mind around all of this. Figure out your net worth can be scary and eye-opening, and that's okay because you need to figure it out. Even if it's scary, you may actually have a negative net worth, but it doesn't matter, but you need to know where you're starting so you know where you're going, so you can plan that path to financial freedom. So that is the design it. And then for the do it is there are three main levers in life when it comes to reaching your financial freedom number. It's the income you can make, it's what your investments can make, and then how much you spend. So a lot of people, they're like, well, spend less money and then you can save more or whatever. But your expenses, you can only trim the fat off your expenses so much. You will never become a wealthy person by trimming off your expenses. You need to figure out a way to make more income and invest more money. So those are the two levers you need to focus the most on. I mean, obviously, being a little careful with your spending is going to help a lot. But income, if you have a job, fine. Maybe you can ask for a raise. Maybe you can move to another company, whatever you can to make more money. Doing a side hustle. For maybe a lot of you, this is your side hustle. That's good. But not wasting time watching Netflix, figuring out a way to make more money is going to be a better use of your time. Let's see, being an entrepreneur, starting a business, or scaling whatever your side hustle is, that's a way to do it. Selling digital products, creating a product that can be sold forever and ever again, that never needs your time. Amazon stores, Facebook ads, whatever it is. There's so many ways you can make money. Just read The 4-Hour Work Week by Tim Ferriss, and you'll have all sorts of ideas about how to make money on a side hustle. Driving for Uber, things like that are ways to add more money to your payroll. Then investing, of course, the more you invest, the earlier invest, the more that money can grow. So super important to get investing as soon as possible. And I'm not a stock market hater at all. I love real estate. I'm mostly in real estate, but I think a nice balance is good. And if you are going to self-direct your accounts, I do it. I have self-directed 401k, retirement accounts, not just your accounts, and a self-directed IRA. You have to be a good steward. You have to make sure it's invested. Don't let it sit doing nothing, or else you're better off just throwing it in the stock market or something. So if you are going to self-direct, you've got to take control of that. And then let's see, creating the journey, knowing what the value of a dollar is. The energy exchange of money is how much time and effort you have to put in to earn that dollar. And it's not a direct correlation, because that dollar, if I spend it now, I can't invest it to grow. So that dollar actually has a value in the future of so much more of my freedom. Like $20 invested today could mean 2 days of freedom 10 years from now. So really wrapping your mind around the value of money is also a part of the journey. Like, do I really need that thing, whatever it is you want to go buy? Like, I still have this. I haven't bought AirPods. Like, I'm so old school, but it's like, that's $80, or I don't know. I'm assuming they're $80, I think. I mean, that's like a whole week's worth of food for me. So eventually I'm sure I will upgrade, but whatever. Keeping up with the Joneses, really sitting and thinking about, what do I need to spend money on? Do I need that big house? The biggest expenses are your housing, your transportation, and your food. So instead of whittling away the stuff that brings you the most joy, the little things, the drink here or there, the coffee, whatever it is, think about the big stuff. If you can reduce your living expenses by getting a smaller house, smaller apartment, finding roommates, renting out rooms, charging your kids rent, whatever, I don't know, whatever you can do. Whatever you can do, that's one of the biggest expenses in life. And if you can house hack that, or hack that somehow, or reduce it, if you can reduce your housing cost by $300 a month, that's a lot of lattes. That's all I'm saying. Transportation, always buying used, only getting so much vehicle that you need. It's a depreciating asset. Maybe, do you really need the boat, or can you just rent one once or twice a year? Do you really need the RV? And if you do have the RV, maybe you should rent it out, because those things make a ton of money. Just thinking about housing, transportation, food. Those are the biggest expenses you have. Other things are fixed. You can't really go hack your health insurance too much, your car insurance. Those are fixed costs. So focus on the big ones. They can make a big difference. And then, of course, if you're saving that money, try getting it into an investment. Let's see. Obviously, taking care of debt, because I don't know if you guys have ever heard this, like the wealthy people are wealthy and the poor people are poor, because the poor people, it costs money to be poor. Like to be broke, it really costs money. You're paying ATM fees, you're paying late fees, you're paying interest, you're paying potentially if you're going to payday, whatever. They take, a percentage of your check if you need a prepay. I don't know. I've never done that, but it's expensive to be poor. So if there's any of that stuff you're paying, take care of those things first. The high interest rates and then the just fees for not having money. Start there, and then tweak your plan. Whatever your financial freedom goal is, whatever you need to save per month, whatever your plan is, tweak it every year or so, because life changes. Maybe you have kids, maybe you decide you want to move to a new geography, whatever it is, tweak it along the way so you can always stay on track for your financial freedom goals. And then there's all sorts of other ways to hack life. If you're a traveler, I can tell you all sorts of travel hacks. For airlines, the credit cards and using points. Staying in a place for 30 days is a lot cheaper than booking a place by the night. My place in Playa del Carmen is $500 for the whole month. I can live in Mexico because my dollar goes really far here. We call it geo arbitrage, geography arbitrage. You can live in Thailand. Your dollar goes like 3 times further there. Here in Mexico, it goes further. In Guatemala, wherever. And go to a place where inflation is pretty flat. Inflation is pretty flat in Thailand. Their prices have kind of stayed the same for many, many years. So we talked about house hacking, van life. I've actually considered putting a little post on Facebook. Who has a van? I'll trade you my Civic for it for the summer. I want to do van life for the summer. You can have my Civic and I'll live in the van, whatever. I don't know. Managing investments. So I'll tell you guys this, not everybody knows how to do this, but if you are about to invest in somebody's deal as an LP, or maybe you're negotiating, putting together some deal, if you're part of the deal and you bring more value to the deal than just being an LP investor, you can negotiate a higher share of either cash flow or equity or both. So not sure what the mix in the room is if you are all more active or LPs, but if you are an LP and you know something, then I would negotiate something, a share for being part of the GP or adding value to the group somehow. Job hacking, if you do have a job and they offer like 401k matching, absolutely take it. If they have free food, eat it. If they have free coffee, drink it. There's just so many ways to like cut a few costs here and there, but still have the lifestyle you want. And you can start living whatever the lifestyle is now. You can start living it now. Maybe it's a modified version of whatever your dream lifestyle is. But my whole point for today and talking to people and sharing this lifestyle is that there is another way, and it's okay to have passions and desires, whatever it is you lose sleep over, whatever you love in life. It's a God-given passion, and to ignore it, I find is it's a slap in the face of the gifts you've been given. I have been a traveler my whole life. It's been in my soul. And for me to ignore it, I think I'm just being a bad steward of a gift or whatever. It is who I am. So if you ignore those internal feelings for whatever it is you enjoy, I think you're taking the short stick in life. There was a quote someone put on a post that I put on LinkedIn the other day, and it was, think about if you, when you die, you today or whatever day you die is going to meet the person that you could have been. The goal is to probably be as close to that best version of you that you could ever be. And if you're not following your soul's passion, I think life is, I don't think it's a waste, but it could have been better. So anyway, I'm going to shut up now because I don't know how long I was supposed to talk, but I'm happy to answer questions or we can just get to networking. But thank you for letting me share.
That was truly, truly awesome. I think we do this is the Zoom wave or something like that, I presume, but that was truly awesome, Melanie. I do appreciate you sharing. I mean, in such a short span of time, I think you said from 2015 to 2020, you've accomplished so much. And again, I know I'll speak for myself. I'm not sure for everyone else in the room. That is actually a hashtag goal for me to actually live my life. Unfortunately, I can't do what you do. I have 3 kids, so it's hard to just pick up and leave. But to be able to just do what you love, be passionate about what you love, and to enjoy life to the fullest capability is truly amazing. And I think everyone benefited from that, from just, the bit of information you shared as far as, knowing your net worth, how to, manage your expenses and so forth. That is truly priceless information. I thank you again for sharing that. So I will definitely open up the room. If anyone has any questions for Melanie, feel free to unmute yourself and ask away.
I'm going to put my email in the chat, and I have the thing that I was looking at as my notes. I've created this guide, so it actually makes you fill these things out as you go. And right now the guide is with my brand designer people. They're making it pretty. So when it's ready, I would love to share it with anybody. So I'm just going to put my email in there and just email me. And when it's all done and pretty, I'll send it to you.
Sure, greatly appreciate that. So I do have a question for you. If anyone else has a question, for starters, I know that, in passing we've spoken. I know you're very focused on raising capital on the LP side. So what made you choose that aspect opposed to being active or anything like that?
Well, so I would raise capital on the GP side, and the only reason I'm talking about raising capital on the LP side, if that's what you mean, is to do the fund of funds model. Is that what the difference is you're talking about? Because otherwise,
as far as raising capital for any given deal, for opposed to actually, doing the underwriting and all that.
Oh, because I know myself and I don't like underwriting. This is what I'm talking about. On the GP, there's so many jobs. And trust me, when I did the 24 unit, I got to experience all of the jobs. And I kind of got a feel for what I like to do. You know what? I didn't love flying to Memphis and schmoozing brokers and pretending like I'm some great operator that's going to buy an apartment. And it's not ew, no. I just want to be who I am, true to myself. And what I love is to talk to investors or potential investors about this mindset shift, this getting their money to work for them and build financial freedom. That keeps me up at night. That makes me excited. I love talking to investors. So a very natural place for me to be is the capital raiser. So I can do it as a co-GP. So I'd be on the GP, take a GP share. And I don't know for you guys how much you know of the GP stack. There's, acquisitions, there's KP, there's net worth, there's liquidity, there's the people that put in the EMD, there's the operations people, there's just all these jobs on the GP, and capital raising and capital is one of them. And that's typically 25 to 30% of the GP is the value of the capital that is brought to the deal. Whether the capital raisers raise all of it, or the KP brings in some, the acquisitions guy brings in some, the operations person brings in some, whatever. It's all kind of, the value of capital is about 25 to 30% of the GP. So as a co-GP, depending on how much I bring, although SEC-wise, you can't get paid in relation to how much you bring, and you have to have other jobs on the GP and all of that stuff, super important. I am a law enforcement officer, once a law enforcement officer, always a law enforcement officer, and I care about law. So it's very black and white to me. It has to be legit. So, but I'm open to the co-GP model, and that's how I set out on this journey. But recently I've been learning about the fund of funds, or SPV, single purpose vehicle, SPE, single purpose entity, all pretty much the same thing, where I create a fund, a single purpose fund that invests as an LP in a deal. And because I'm doing that, I'm not diluting the GP share because I'm an LP. So I can negotiate higher returns, share those with my investors, take an arbitrage, that's my payday because I'm not getting paid on the GP. And what I love about the SPV is me and a couple of my buddy capital raisers can pull together. Instead of coming in with $500,000, we can come in with $3 million. Look, come in like a boss, throw our weight around, and get some higher negotiated splits and perks. And it's a win for everybody. It's a win for my investors because they probably get higher returns than they would have had they gone direct to the sponsor. It's a win for me and my partners because we get to do pretty much pure capital raising and get paid to do that. And it's a win for the GP because now they don't have to dilute their GP. They don't have other people with their little fingers in the pie and needing to make decisions and do petty jobs on the GP. Yeah, so I'm open to both models. But what I truly love is to just raise capital. I mean, I could always go get my broker dealer license and do it that way, but you gotta start somewhere, you know?
Of course. So, what's a typical conversation like with, with somebody that, of course, we want to follow the guidelines of the SEC. You want to know who you're speaking with. You want to have that rapport with them. But what is, for, anyone who's looking to raise capital, what is a typical conversation?
With an investor?
Yeah. How do you get them? How do you not sway them, but how do you convince them that, hey, real estate is where you should park your money opposed to any other vehicle out there?
So I call myself a boutique company. I want to stay small and I want to know each of my investors individually. So I want to have a relationship with them. In fact, I want to have a relationship with them so much that once a year we all meet annually in a place like Mexico or Costa Rica or whatever, because we like each other so much and we're building life together and we're moving together toward financial freedom that we meet once a year. And it's kind of, I call it my founders club thing. Haven't done it yet because I don't have enough people, but that's what I want my business to be. So that being said, when I have conversations with people, I truly believe that real estate is the best, one of the best, if not the best, place for money. That more Americans have made their wealth in real estate than anything else. I mean, there's the one-off, app designers and IPOs and whatever, people make money doing that, but real estate has been the tried and true long-term wealth building strategy. So I guess when I speak to investors, I am so passionate about it that it just comes through. I like facts. I'm an analytical person, and I probably appeal to people who like facts and analytical stuff and not so much the emotional side of it, because investing isn't emotional. So it's math, I guess, is how I approach it. And I don't know, taking an interest, listening to what their needs are. And if investing in a syndication isn't best for them, then I will tell them that I don't think it's best for them. It's a long-term asset. It's not fluid or liquid, sorry. It may or may not be the best for them. So I don't know. I think my thing is, when I have this platform and I have a YouTube channel and the website, whatever, people are like, oh, Melanie, whatever, they might come into my world. But when I get one-on-one is when I really connect with people, because I want to connect with people. And I think it comes through authentically. I hope I answered the question. It was kind of roundabout, but I just think we're in a human business. Real estate is just the vehicle. I just want to connect with people on an individual basis, give them facts and information, and then they need to make that decision for themselves. And I just support them in that and give them opportunity.
Understood. Well answered. Again, if anyone has any questions, feel free to unmute yourself and shoot away.
One more question for you. Question for
Go ahead, Jim. Go ahead.
Yeah, Melanie, I'm curious about the model that you talked about. Could you speak a little more about fund of funds and the single purpose entities and how they differ? And are these newer vehicles for people that are trying to do what you're doing?
So they've been around for a while. I don't think they're super well known, but they're starting to gain some traction. I think part of it is because of Hunter Thompson. Honestly, he is the person I've learned the most from. I've been to 2 conferences lately, BEC 2021 and IREC, which is Intelligent Investor Real Estate Conference. And he spoke at both, gave the presentation twice. So really, I've only been learning about this probably for the past month and a half or so. It just makes complete sense. So SPV is the word he uses, special purpose vehicle. And then my friends in the fund and institutional world call it SPE, single purpose entity. Regardless of what the verbiage you use, it's a fund or an LLC created for a single purpose investment. Whatever that syndication is, 1, 2, 3 Main Street, it invests in that one. It's not a blind fund. It's not an open fund. It's meant for a specific purpose. And the entity, after it's formed, investors come in the entity, I am not a sponsor anymore. I am now a managing member of the fund. and we invest as an entity and as an LP. So the GPs, instead of having 50 investors, they have one investor, one K1, and now I have to send out K1s from the entity. Did that answer the question? I mean, there's still a ton to learn. They're very expensive to form, so it all needs to make a lot of sense. I've talked to a number of lawyers that do these legit and legal, and so far, I think they're going to start taking off. We're going to hear about them a lot more moving forward.
And so do the same rules apply to the entity as applies to you as an individual when you're on the team? And or are those two separate pieces? You are on the GP team as an individual, plus you have the fund that's for clarity is just an LP. And or let me just ask that first so as not to muddy the water with the next question.
Yeah, sure. I think, so my understanding was that the SPV just invests as an LP. And so you're an LP, negotiate higher splits because you need an arbitrage of some sort to get paid as a, capital raiser, fund manager, or whatever. I am not a sponsor, so I'm not a GP. I'm not on the GP. It's a little bit different as far as the SEC goes. I'm a managing member of an LLC that my investors are part of. So, and if you all don't know, if you're a managing member of a fund, you automatically are considered accredited for the purpose of that investment, by the way. I have recently talked to a group that they work with SPVs, have done a number of them, but they give a share of the GP. So I have yet to figure out how they structure that and how that works because, yeah, to be a GP and an LP, it's really, I think the sky's the limit on how it can be formed and negotiated. Like there are a lot of levers to pull. There's splits, there are waterfalls or lack thereof, there's who gets paid first, there's, all of that stuff. I would probably negotiate with the GP if it made sense for them to pay my legal fees, because that's a big chunk of money up front. It costs about 10 to 12 grand to form an SPV. But I'm talking to, if you guys are familiar with Veravest, Lance Pedersen, he owns Veravest. They have what's called an SPV in a box. Well, I don't know if it's called that. He calls it that with air quotes. So if you go in under Veravest, they are your IMS, your investor management system. They give you that platform. They handle all of your accounting. They issue all your K1s. They also negotiated a lower price for the SPV formation with a lawyer. So it could cost about $6 grand if you go in his platform, but there's a monthly fee because you're paying for the IMS, you're paying for their accounting. They do all of your legal, your CPA stuff, plus all of your accounting and reporting to your investors. So it's kind of nice because when you get into the fund world, it gets kind of complicated with reporting and things like that. But it's not one of the complicated funds that are, it's under a certain threshold. I think 50 million is the threshold, where after that you have to actually have someone managing the finances of the fund. So it doesn't hit that level. It's probably the lowest level fund that you can operate with.
So are you investing as an accredited entity, or just you personally are accredited because of the managing the fund?
So if the sponsor's offering is a 506c, then all of the people in the fund in my SPV have to be verified accredited. It doesn't change. If it's a 506b, I have gotten 2 different answers from 2 different lawyers, so I don't have the full answer on this. That my question to the lawyers was, if I have 15 sophisticated investors, do those 15 count against the sponsor's 35? And one lawyer told me, no, the SPV counts as one non-accredited or sophisticated investor. And then another lawyer said, yes, each individual investor counts against the 35 for the sponsor. So I don't have that answer. But in general, from what I am gathering, that it matters for the investors still. The SEC is still protecting sophisticated investors, and So it would probably be easier to have accredited investors in the SPV, but it is still okay to use it for a 506B. I don't know the nuances of that as far as what it counts for against the 35.
Mhm. And then I wanted to follow up with, is it a pass-through entity? Do all of the benefits pass through to the people that are in the entity?
I would say yes. Of course, it depends on how you design it. They would pass through, and they can, and they should, in my opinion. But if you have a bunch of people investing self-directed retirement accounts, they don't need the tax benefits. So within the entity, I would probably offer some maybe increased split or something for the people that will give up their pass-through benefits for me or for other investors inside of the fund, which should be considered on a syndication anyway, in my opinion. But yes, but it is a pass-through.
So all the depreciation, the normal pass-throughs apply, just like as if they had invested individually.
Correct. So this whole word fund, I don't even know what the definition of fund is. It's really an LLC. That's what the entity is. It's an LLC structure with a managing member and members. So I don't know why we have to call it fund, but whatever. We call it a fund. It's really cool to say that. Sorry, I don't know all of the ins and outs. I'm really just learning this. Hunter Thompson, though, I would say of anybody in the space, probably has the best training on it so far.
James, I think you had a question.
Yeah, I was just going to say, great story. It's you mentioned, and I've heard a couple people mention it, and I'm one of them that got their, I guess, juices flowing by reading Robert Kiyosaki's Rich Dad Poor Dad. I mean, I wish I would have read it 20 years ago, because I really would have, come a lot further than where I am now. But that's all, good and well. So what about it? Did you, did just the different, ways to get passive income? I mean, just a whole idea of creating passive income. What?
My biggest takeaway was the trading time for money thing.
Right.
Where if you make money, you spend money, you will forever be in the rat race. And that's what the rat race is called. You make money, you spend money, you make money, you spend money, you make money, you spend money. Where you should be making money, spending a little bit of money, investing the rest. Make money, spend a little bit of money, invest the rest until your investments pay for your lifestyle. Or so with the whole ESBI, the employee or someone's paying you, the self-employed, where you're still trading your time for money, but maybe you have a little bit more freedom. The business owner, where other people work for you, a little bit more freedom, and then the pure investor. So it's definitely those were probably my biggest takeaways, is the whole mindset about the assets and the cash flow and growing the income. Like that's the key. Grow the income, invest more, spend less, but you don't have to. You can enjoy the finer things in life, and it's okay. We need to live. We need to enjoy life. You just need to pick what you truly enjoy and not just do something because the Joneses or the house next door, or we have something that society tells us we need to have or do or be. Got to get outside of that.
They should make that book preferred reading for high school, get kids.
I agree. I'm about to put another book in there, but I want to make sure I'm spelling the author's name right. I'm reading this book now. I'm almost done, and it's really helped me. Sabatier. It's really helped me wrap my mind around this financial freedom. He's a big part of the FIRE movement, if you know it. Financial independence, retire early. Sabatier. Grant. Okay, here we go. This book, Financial Freedom, is what it's called. By Grant Sabatier. He's a big FIRE movement guy, but this book is very clear. The only reason I don't love it 100% is that the book is really about investing in the stock market. He mentions real estate slightly, but I think like he's the one that's like, oh, the 7% return is a reasonable rate of return. But man, if you're in real estate, you should be getting an average of 12 over the course of life. I mean, I know I'm getting 15 just on a promissory note, but with the 7%, you're getting compounding interest. And with real estate, you don't necessarily get the compounding interest. You have to be very intentional, that's not a word, intentional about reinvesting the money and then looking for deals that grow in appreciation. So with the two, it's a little bit more complicated, but you have to look at what it is that you invest in and figure out, is the money compounding or not? So anyway, his book is very good, but he talks about more of the stock market, and of course the eighth wonder of the world is the compounding interest. And since we're real estate people, if you're not in the stock market, you need to understand the difference between investing in real estate and investing where there's compounding interest, and make sure you're calculating correctly. I mean, what we do is beautiful because we have appreciation, the tax benefits that it's hard to put a number on, just that you don't get in the stock market necessarily. And then, you know, cash flow and equity buy down and all that good leverage. Like it's there's more pieces. So it's harder to like lock it down on, okay, I need 8 apartments and I'm financially free. Like a lot of levers to pull. But it's fun. It's fun. I like it.
So, Melanie, so to the compounding interest piece, correct me if I'm wrong. What they typically are telling you is if you start with, let's just say, for the sake of argument, $1,000, and you're earning 8% on that, at the end of the year you have 108,000. So you start over again at a larger number each year, and it just keeps compounding until it hits that hockey puck piece. So in real estate, as long as you're reinvesting your profits, then you are exercising the exact same idea in regard to keeping your money invested. And I think the biggest challenge is actually the time frame. Once you have a deal that goes full cycle, are you able to get that back into another deal right away? And I think to protect yourself from being in single investments where you might have a 6-month time between your next investment, if you ladder those together and invest, instead of investing 100,000 in one deal, if you could invest 20,000 in 5 deals, then you won't have that all of your money sitting empty for a period of time. Let's say it did take you 6 months. You've only got 20,000 that if you were lucky enough, and I know a lot of my investments over the last 5 years have doubled the money that I actually put in. So now I'm sitting empty for 5 months before I can reinvest that. But the other 80 is still working for me, still compounding for me. And the thing that I love the most is that in the stock market, you can borrow money to buy stock. And they call that buying on margin. And it's a way to leverage your dollar to create more buying power. But it still doesn't come close to comparing to the type of leverage that we're able to use in real estate. And margin is considered very risky, high risk, kind of high wire act.
What just happened to the GameStop thing? Wasn't that?
I'm sorry, say again?
The GameStop game.
Oh yeah.
Isn't that buying on margin?
Well, some of it is. Yeah, some of it is, but there's a whole lot more there to unpack. But what I love about real estate, you are buying on margin, but in stocks, you buy your dollar isn't as big. You're not buying as much buying power. Where in real estate, you can get 75% of the money is borrowed money. And so you, for every dollar that you're investing, it's like investing $75. You know, that you're buying the opportunity to earn interest, if you will, or profits off of $75 only by spending $1. So that's a beautiful, beautiful thing in my mind. But the biggest thing I like about it is that from a risk perspective, in real estate is considered a very low risk investment compared to buying on margin. Margin is considered a high wire act. And real estate, because you're buying a physical asset, not a piece of paper, and the sponsors that you're depending on to make that profit for you, they are not depending just on appreciation, but they can force appreciation, and they can create efficiencies on the expense side of the business. And there's so many, you talk about levers to pull, so many levers that they can pull that there's so much to love and so little not to that. But anyway, that's stealing a little bit of your thunder. I apologize, but I had to, like you, I get excited about it. I have to get it off my chest.
No, I think it's a game, and there's so many things to get into, and you shouldn't get locked into one. Just keep learning. Like I kind of was a stock market hater for a bit, but now I'm just like, I think there's a place for it for sure. But it's hard to know everything too. So being kind of an expert in something is probably good, and then kind of dabbling in the other stuff and learning as you go, or finding friends that really love that other thing and that you listen to them and they listen to you about real estate. It's a nice marriage. But inflation, I love real estate for inflation too, because all of that leveraged money, you're getting so many benefits. Like if the dollar inflates and the real estate goes up, you get to grab all of that, and the bank still gets their little tiny mortgage. And yesterday's, or today's crappy dollars, today meaning the future dollar, that we leverage now in the stronger dollar, and now we get to pay it back in crappy dollars in the future if we have inflation. Anyway, I am sold on real estate for sure, but I do love to learn about all the other things, and the compounding interest in the stock market is not something to brush under the rug. I think it's very important to consider. And then, like you said, Jim, definitely not spending the principal, reinvesting whatever gains you get. But what is your thought on spending or living off of the cash flow?
So I think that that depends on your lifestyle. It depends on what you're trying to do. So I absolutely love what you're doing. And like so many people are probably envious of you taking that plunge. A lot of us feel that we've taken a lot of chances in life and other things, but we're so afraid of doing that one. So afraid of giving up some of these other things that we have for whatever reason. But I think that in a situation like that, from a cash flow perspective, you can look historically. Real estate has outpaced just about any other investment vehicle that you could have for that month-to-month or yearly or quarterly cash flow, and is a great opportunity. And the wonderful thing is that if you really are needing the cash flow more than the appreciation, you can go out, just like in stocks, you can buy a stock that's mainly a dividend stock, right? As opposed to a Google or an Apple, which is an appreciation play. And real estate, you can do the same thing. You can invest in, say, Midwestern markets, which have a higher yield and maybe don't appreciate as much. But if you're living off that cash flow, and for a lot of people, they are almost entirely cash flow investors, where other people are looking for. Now, I mean, if you want to be an appreciation investor, then you're investing in California, right? But many of us are not. And it's funny, isn't it, that we say never invest for appreciation in real estate, but in the stock market, isn't that the primary thing we're investing in?
Well, you're not getting any cash flow, that's for sure.
Well, in dividend stocks.
It's reinvested. Well, yeah, it's reinvested, but yeah.
I don't know if you found, but one of the interesting things that I found when we have people ask us about risk, and they're afraid to invest in real estate because they don't know enough about it, or they don't know enough about that asset. But when you ask them what they know about the stocks that they own, they know so much less about the stocks that they own than they could potentially know about a piece of real estate. And they don't hesitate to pull the trigger on the stocks.
Yeah.
But something, and I'm yet to figure out what it is. There's something there that causes them to pause in real estate. And I don't think it's the unknown, because they know nothing about the stocks that they're buying most of the time, nothing at all. And the other thing is, you don't really get financials every month and a report every month from the stocks that you own. But if you invest with good sponsors, every month they send you financials on the property. Every month they'll send you a little blurb about what's going on in the property. So
yeah, it's just a societal culture, what we were raised. Like, if you weren't raised to think any different than that, it is the safe thing. It is the acceptable thing. It's what you're supposed to do. Is invest in the stock market and, put a 401k and hope one day that it's going to be worth enough that you can retire when you're 62, 5, 6, 5. What is that? A 65, 66? I don't know.
Depends on what year you were born.
Oh.
Yeah. So for you, I think it's 67. For me, I think it's 66 and a half.
I'll be so wrinkly by then. I love it. It's a journey for sure. I'm super
Yeah.
grateful. I've had at least 5 years of education. I feel finally I'm to a point where I know enough. Like I was so hungry to learn in the beginning when it was like reading Rich Dad Poor Dad. This whole world was open to me, but it was just hours of reading, hours of podcasts, hours of studying, thousands and thousands of dollars of coaching programs and conferences. Oh God, I'm finally where I am now, although I still have like a long ways to go. But man, it's hard to know everything. But money is not, the money itself is not important. It's the tool that buys you time, and the time is what's important. You cannot make more time, but you can make more money.
Yeah, I love it.
And it's a game.
Well said. Well said.